Hey guys, Mike here. So, oh boy, what a day in the market, and I guess all that VIX info in Sunday's video actually kind of played out perfectly, didn't it? I think the VIX was up 8% as soon as we opened up this morning. And again, it just has to do with being at extreme levels. You get pops. Whether that's going to continue, we'll have to find out, right? We know there's, somewhat some weakness, or could be in the first, 10 to 12 days of the month here. And I think a lot of it has to do with rotation, which I'm going to show you and stuff, but there is especially one thing in particular to watch out for. If this happens, you will see more weakness in equities, especially the larger caps probably, and everything like that. Because don't forget, I mean, you're already seeing window dressing, but you're definitely going to see it. If you see those large caps continue to show weakness, you can guarantee the fund managers are going to be loading up into that stuff because they're playing all kinds of games right now. I mean, I don't know if you noticed, like I told the members, the garbage stocks were up today. Carvana, Beyond Meat, I mean, up massive. Even though you saw what was going on with the Qs and the SPY, right? They were up massive. And because if you look at the volume, it's pre-market. Who does most of their work in pre-market? The institutions, right? And so what happens sometimes is, I read multiple articles on this where you'll have like certain fund managers, they're behind. They miss some of the rallies or miss something. And so what they'll do is these garbage stocks that are heavily shorted, I mean heavily shorted, is they'll just start plowing money into it because they know the traders, retail is going to start FOMOing up to help push it up. And then they'll dump it on, obviously, retail. But I mean, think about it. If you can spend $1 million, they spend way more than that. But $1 million to run a stock up 30% in pre-market, that's a lot of money in a very short amount of time. And all of a sudden, it looks like your returns are a whole lot better than they were, right? I mean, think about that. So, you're seeing all kinds of crazy stuff right now, while you see quality stocks obviously going down today. And so always pay attention to that. But if you'll give me 2 minutes, like I've been wanting to do this like 5 days now. And you know me, if you follow me long enough, I hate fear mongering. Don't like the channels, don't like the stuff, but I don't know why they're doing it. But understand, and maybe they believe what they're saying, but I just don't. Okay. And if you're a real estate expert, let me know. But the one thing I keep seeing everywhere is, oh, the real estate market's going to crash. It's going to be worse than '08, right? And I'm sitting there thinking, I don't know. Let me look at the numbers. I'm a numbers guy. Let me look at this, see if that is true. And I'm going to paint a picture for you. I'm going to show you the facts. You decide for yourself and let me know in the comments what you think about this. And then we'll try to put it into context, okay? Understand, this is existing home sales right here. You see where 07, 08, and all that stuff is, right? That's where we're at. That's existing home sales. I'm not selling my house. Why are we not selling? Does anybody know? Because our interest rates are in the toilet. I have a 2% mortgage. Why in the world would I sell my house right now? Okay? Doesn't make any sense, right? So that's existing home sales. Then you go over here. This is '08 compared to now. Here is the foreclosure activity January through June. First 6 months. Look at that. I got the first 6 months because obviously we won't get the second half of the year until later. But you can see, look at 2021, 2022, 2023. Like, big difference, right? These are up in the millions. This is not even 200,000 for an entire the first 6 months of either one of these years, right? So you got all that up. You don't even get one of the years in 2008, right? Then what else was going on? Remember '08? All the shenanigans the banks were doing, right? With these ARM type of applications, obviously adjustable mortgage, all that good stuff. Well, you can see they were through the roof. Look at that right there. Big difference. Look at this now. It's down here, right? So you don't have all these different kind of mortgages we had back then, which got a lot of people in trouble. A lot of the predatory lending you had, it still goes on, but nowhere near at the level it was back then, okay? And then here's the big one. Here's the whole thing. This is the most important thing. The housing inventory total. So this is new, existing, all of it. Look at what was going on from 2000 up to the crash. The inventory was increasing. Look at what's been going on since. It's been decreasing. Look at where it's at now. It is below where it was in 2000 by a lot. Not even close, okay? When we zoom in on that. Then you got percentage of U.S. homes that don't even have a mortgage, okay? I don't know what it was in '08. If it was lower than this, I couldn't even find one, but I'd be willing to bet, since it's been going up since 2013, it wasn't, almost 40%, okay? On top of the existing homes that have, I've showed you mortgage rates below 4%. And they're not adjustable mortgages, okay? Then you got what's going on now. Obviously, rates were going up. Now they're going down. Mortgage rates have been going down every single week. And that should continue as long as the Fed has paused. And this is what really got this thing going. New family homes sold annual medium year-over-year price change. Biggest drop in history. Never seen anything like it, right? Biggest drop I've ever seen. I think it was like either 18%. I think it was 18 or 19%, if I'm not mistaken. That's what people went, oh my God, look at 08. It's worse than that. The drop in the prices and stuff. You're like, oh my goodness. And this is where we got to think about it, okay? It depends on your definition of crash. First of all, it can't be 08, right? It cannot be 08 because you've seen it. You know, talk to people. If you own a house, especially, you know this. You know, if you lived through 08, what 08 was all about. Why that crash happened like it did. Okay, why we had neighborhoods where wolves and leopards were running through it and stuff because nobody lived there because there were so many evictions or all these new homes just abandoned, right? We know what was going on. That is not happening right now. Nowhere near to that degree, all right? And you have the inventories in the toilet. You have people like me and you and so many people sitting there. I think it's over 50% are sitting in mortgages below 4% and they're not adjustable, all right? So the eviction rate or the foreclosure rate is not just going to go through the freaking roof. Not unless, of course, there's a massive recession where everybody loses their jobs and can't pay the mortgages. That could play out. But it depends on your definition of crash. Here we are. Here we started in 2020 before inflation. Inflation kicks in. What happens to home prices? They go through the roof, right? Fast as I've ever seen it in my lifetime. All right, really, really fast, right? Now they've come down to here. So if this is a crash to you, okay, we agree. I'm good with that. But people seem to think it's going to go from here back. And that's the kind of crash it's going to be like you saw back in 07, 08, when it was a complete nightmare. And trust me, I was literally in a home that happened to. So I can tell you, it was the very first home I ever bought. Woo! That was fun times. Let me know in the comments if you had to go through the same thing. And so that doesn't make any sense because there is so much pent-up demand right now. I know, ask people you know. I know people personally that are renting a home because they've gone through a divorce or something happened or whatever. The amount of rent they're paying, it is obscene. It is obscene. I couldn't believe when I almost fell out of the chair when they told me what they were paying for a house just to rent it. So they can't wait. They didn't even worry about the prices that much, really. Our problem is inventory around here. You go, why don't you go out and get one? Oh, I've tried to buy 3 houses, can't get it. Because in certain areas, like the one I live in, and especially in Florida areas, it's very tough. A lot of people are moving to Florida, right? And there'll be a bid war and everything. And some people just pay cash. And these people, well, if you can't pay cash, oh, well, you're out of it, right? But as especially the rates continue to drop down and then prices continue to come down like this right here, because there's so little inventory compared to in the past, there's a lot of pent-up demand. People are tired of paying rent. That's for sure, right? They're going to jump on it. And so that's my thing. That's my big intention of first of all, this is not 08. Okay, that makes no sense whatsoever. All right, to me. Let me know in the comments if you disagree. 2, would you expect home price to come down, especially if there is a recession next year? Of course. Of course you expect that. The other thing that's happening, though, remember, the home builders are smart. They know not to build too fast, right? Like they literally have limited how they build this stuff, how fast they build it, because they know inventory is low, and they know people with existing, right, homes aren't selling anyway. Okay? So it's just totally different. It's just totally different to me. So let me know in the comments. Again, if I'm missing something, I have no problem admitting I'm wrong. No problem. But I've been address that for like a week because I want people freaking out going, oh my God, there's going to be 08 all over again. I never want to live through 08 again. Okay, I never want to live through that again. I don't know about you. All right, so now, today, what do we see again? This is starting to become a theme, right? Starting to become a theme. And guys, before we continue, if you're getting anything out of this, please hit that thumbs up down there. I really appreciate it. And if you like the material here and the videos, think about subscribing. Change. But look at this. Transportation, boom, once again. PSCT, small cap tech stocks. And there's real estate once again. It's in the top 4 like every time I show this, right? And then what's at the bottom? There they are, the old Mag 7, right at the bottom, rough day, right? XLK at the bottom, at least in the bottom 3 or 4. You're seeing this constantly. Communications, which was the #1 sector in 2023, which I showed you over a month ago, right? And the thing to watch, and here it is, the dollar. If the dollar starts to rally up to that fair value gap, there's a daily fair value gap right there. And look, this thing moves just like any other stock, chart, anything you want to put on it. And you look to the left and see fair value gaps has come up to, mitigated, and sold off. If that happens, what you will see happen is it will put pressure on stocks, especially I think the Mag 7. It's just usually the way it works out. And if I go through here and try to put this together for you so you can see it, again, a lot of times it's not a complete direct correlation, but you've seen it more times than not, okay? And as you can see, the dollar was going down. The Mag 7 was absolutely ripping like crazy. The dollar's been moving up. Mag 7 has been selling off. So it could put that extra pressure, have them move down. And not only the Mag 7 and certain other stocks, you also could have the gold bugs, right? Because as soon as the dollar popped today, gold started selling off, and it's had just a massive move, unbelievable move. Congratulations to whoever owns gold. And there's not 100% direct correlation, but you can see it's a pretty good correlation, right? I mean, as soon as the dollar started selling off a lot, gold started spiking like crazy. And as soon as it spiked today, if it continues to go up, what's going to happen, I'm telling you right now, is gold's going to sell down to that level right there, and people are going to reload up on gold because the dollar should continue to sell off after that. So it would be a great setup. I actually hope it happens personally, because it'll allow a lot more people to get in certain stocks, get in gold, whatever you want to get into. And then when the dollar starts to sell off, you're going to see it rip, right? It would make a perfect setup for year end and going into January. Let me know what you think about that in the comments. Now, this is important to understand. You look at the SPY. We talked about this on Sunday's setup, right? Little sell off down here. Where'd it bounce? Right there on that descending trend line. But you do have bearish MACD cross now. RSI looks like it's trying to get weak right there on you. And when you look at it, I mean, obviously there's plenty of support. What, 452 right there maybe? If we break down below that, which also would move you down into a daily fair value gap, which makes sense to mitigate that. Now, when you go to NQ, this is even better because this is what's been leading, right? Bearish MACD cross on this as well. RSI looks like it's trying to cool off there. 50 is trying to come up, cross the 100 though. Then it hadn't hit this trend line yet, right? We expect it to. I expect that to be the bounce point right there. But again, there's that gap. And this is what people want to see. What's going to happen, we don't know yet. And that's only like a 2.5% move down. But what it would do, and we talked about this, not this past Sunday, but the Sunday before this when we were setting it up, you would mitigate an RTH gap and 2 daily fair value gaps, right? So that would be super powerful for a great bounce coming into year end, coming into January, right? And it would make sense if the dollar would move up, right? That would be a perfect setup. Is it going to happen? I personally hope so, but that does not mean it's going to happen, okay? I think it was Morgan Stanley's like #1 chartist or something came out today and said he's expecting the market to drop to 3,500 or something. Again, it's the article you got paid for. I'm not paying for the freaking article. If you happen to get into that and have any information, let me know down in the comments. But that will be crazy if it happened. Now, you can see, obviously, we did bounce off the trend line. We come out to the weekly right there. It looks like we did, but didn't quite touch it. And again, what else would we go into? We would go into where that RTH gap is and those 2 daily fair value gaps. You have a weekly fair value gap. Remember, this is what we fed into on the sell-off, and this is what's pulling us up, okay? It's great for liquidity and stuff like that. It's what the market looks for. Now, IWM, you still see the rotation, right? Because the NASDAQ staged a great comeback at the end of the day here, but it was down quite a bit. And you look at this right here, and the RTH, I'm trying to think of IWM. I think it went maybe negative for just a few seconds. But again, this one's still rallying. It's up there at that support level right there. The inverse head and shoulder is still playing out on it. The rotation's still happening. But you can look and you can see, where's the money coming from? It's coming from off the sidelines, and it's coming out of the Mag 7. Okay, it's no coincidence. The IWM moved up almost 7%, and the Mag 7 has moved down in the opposite way. Okay, you just look at this. You can say usually they're directly correlated, right? As the Mag 7 is going up, you saw IWM going up, not at the same rate or whatever. You can see it right there perfectly. Okay, but every once in a while, they're going to pull apart and not go in the same direction, and that's basically what you're seeing here. So, and we talked about it. I mean, it shouldn't be a surprise. We have talked about this coming into this, right, to set us up. Now, Tesla, very small range today. Didn't even reach prior day's higher and low. But what I tell you, 231 to 233, 234. But what I tell you, 231 to 234, if it comes in that area, watch for the bounce. And once again, been going on for over almost a month now, I guess, it bounced. That is just strong support at this point in time. And what do you see it doing? To me, that looks like it's doing the same thing it's done every single week before it makes a nice move. It is wedging, okay? And what happens? That usually means it's fixing going to make a move up or down. You can choose if you want to which way you think it's going to go. That 4-hour fair value gap is right above. That will make sense for the draw on liquidity right there. And a lot of people are hoping this goes down to 225 so they can sell cash secured puts and let this thing run up, and they can make anywhere from $500 to $1,000 on that cash secured put whenever you want to do it. Usually they're selling the Januaries. But that is what people are looking for right now. Let me pull this out and extend it. And again, when we go out here and look at it, it's just a wedge. within a bigger wedge. I mean, we are still in this big wedge right here. We haven't broken. Now, if we break the 231.84, I believe that is, yeah, we're going to 225. And we're going to mitigate the rest of that RTH gap. At that point in time, you would have a lot of buyers coming in. Okay, even if I pull up, the moving averages, there's nothing going on here to worry about. But I will say this: see where that 200 lands? 200 lands right below the 225 and that RTH gap. So you can guarantee buyers by the droves will be coming in right there. You can also see that when we pull up our volume profile, great support right there. Now, the other thing about Tesla, they did have news come out, which, I mean, depending on how you look at this, wasn't great. About the Chinese sales and everything they had, up 14.3% from October. But again, that was 2 straight months of sequential declines, you can see, but it's also down almost 18% from last November. So, China's economy is not good. All right. Now, NVIDIA, again, this double top still playing out, but what do we hit? So like we talked about, there's the 50 and the 100, right? That's what held it up. Got some support right there. We said if this breaks, go ahead and watch 433, 435, right? If that does break. But what do we got right below it? A fair value gap, which is what it's digging into now. And then if it breaks below that, you can see right there, there's another RTH gap down there. And so, pay close attention to this. If it fills the fair value gap, that'll put us around, I think, the 434, 435 mark right there. And again, you're going to have window dressing. Big boy's going to be stepping in, okay? RSI is below 50. Bearish MACD cross has already happened. And so this is going to be, one to watch. And if you're wondering why, if you own a lot of AI stocks that are down, who's the AI king? It's NVIDIA. Microsoft, this is one I want to talk about because you can see people started dip buying this one. Like this started coming down right there. People started dip buying into this thing because Microsoft to me is different than Apple. Microsoft, and not that Apple's not a good company, but Microsoft did have good earnings. It's one of the rare of these Big Mac 7s that did have good earnings, that had growth, all that good stuff. It buys back its stock. It has a dividend, but you can see, got a bearish MACD cross, and you got some RSI divergence right there at the bottom. And so we've been talking about this. It's way too overextended from its moving averages. I would love for it to come down. I mean, I'd love for it to come down and hit that trend line right there. I don't know if it will, honestly, because people already started stepping in buying this and probably going to try to push this to 400. And so the worst case scenario, people are going to start DCing in if this continues its weakness, of course. So don't be surprised if we don't hit 360, 362 somewhere. Don't be surprised if this starts to push up or at least trade sideways. All right, just keep that in mind. But let me know what you think about Microsoft as well. Now Palantir, one of these AI companies, massive sell-off today. I didn't see any news out about it. But again, big move up, big move down. Don't be surprised this goes all the way to $15, between 15 and 16. Again, this right here is a big gap, and that's why people are picking that. If it gets in that gap and starts trying to fill the gap, you're talking about all the way down to 15. And as soon as NVIDIA started selling off, this is what we're talking about. AI King goes down, most of the stocks around it go down too, and that's just the way it is. And when it starts to move back up, watch these stocks start to take a turn. Now, when it comes to earnings, going to end up with tomorrow, NEO, AutoZone, Sentinel One, Toll Brothers, the big ones to think about, Dave & Buster's, and Stitch Fix. Now, didn't have anything going on today, like I told you, but tomorrow you'll end up with the S&P Global Composite PMI final, Services PMI final, and then the ISM Services data. Okay, this is going to be new orders, PMI prices, and then the JOLTS job openings. Is this going to come in hot or not? I believe it's the JOLTS that always comes in, I believe, hotter than usual, and then the ADP that is total opposite, and it comes in lower than usual, if I'm not mistaken. It's hard for me to remember that, but they never match up, right? And then there's always these big adjustments, and they come back and go, oh, well, actually, the numbers weren't that high or whatever. And it's going to be interesting to see, because now you have a lot of the auto workers coming back, right? And so from the strikes, so I don't know really how that affected or how they even counted when it came to employment stuff. So we'll have to see about that. If you happen to know, let me know. When you're on strike, technically, you're not unemployed. You didn't quit, right? You're still employed. You just, I don't know, not going into work. But that they calculate the unemployment rate so weirdly, and how they do these job numbers too is crazy to me. So if you happen to know, put down in the comments and stuff. But there is, so that, and all that's going to happen, most of that's going to happen at 10. So the market would have already opened up. And so you might see a big swing at 10 o'clock. So pay close attention to that if you're in it or not. But anyway, hope you guys got something out of it, guys. Please hit that like and subscribe button. And I'll see you guys tomorrow. Hope you have a great night.